Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This edition of Moving Iron Podcast is brought to you by John Deere. I've got Greg Machinery Pete Peterson on to talk about what's happening in the world of equipment. Greg, how you doing today?
I'm doing well, Casey. How you doing?
Doing good, man. Doing real good. It's been hot and got a little bereavement today, but it's going to get right back up there again. So we don't no rest for the wicked, man.
Summer of 26, hot, humid, and stuff burning up, and wow, it's been quite a summer.
Quite a summer, no kidding. Speaking of quite a summer, there's been a lot of auctions going on over the summer. A lot of different things happening, and you watched one happen down in Oklahoma that was kind of feeding some more of this as you look at this 5 to 10 year old stuff. A lot of movement there.
Yeah, the big sale last Thursday. Our friends at Big Iron had a online farm retirement auction for a guy's name was Jerry Evans, Canton, Oklahoma. So very late model equipment line, beautiful stuff, and geographically interesting too. Oklahoma. I mean, it's flattened out over the years. It used to be, if you drifted that far south, you would maybe see some hard cash auction price break just geographically, but since COVID, really haven't seen it. But just a couple examples on the sale Thursday, Casey. So a 23 model 9RX 640, only 255 hours on it, 3 years old. That brought 508.5, which when you break that down as a whole, so far this year, the average on a 9RX 640 at auction is actually up. Not a lot, but it's up 2.7%. Average now is running just over 486,000. So I thought that was interesting. 508.5 on that one. Air Seeder, a 23 model John Deere N560 60 foot, went for $398.25, and that's the highest auction price I've seen on an N560. Of course, I haven't seen a ton of them hit the auction market yet, but previous high was I think $380 hard cash. Sprayer, late model sprayer, 24 model Deere 412R, 208 hours. That sold for $427,750, and that's the third highest auction price I've seen on a 412R. As you would expect, it should be right up there with 24 model with 208 hours.
Yeah.
Another pre-def combine, we've talked about these recently, but an 11 model 9670 STS, 2,585 engine hours, did 85,000. I think last week we might have talked about one in Lakefield, Minnesota that brought 99 plus over 2,500 hours. So another example here of a strong one. Again, 85K in Oklahoma. And then a Swather, a 20 model John Deere W235, only had 266 hours on it. And that brought 171.25, third highest auction price ever on a W235. And maybe I thought the strongest price on the whole sale, Casey, was the livestock trailer. A 2009 model Wilson PS DCL 402 53 foot tandem axle, and that brought $50,250. So 17 years old, over 50K there. So, yeah, that was quite a sale.
It must have been real nice because I don't know if that cost that much when it was brand new. So it's
no, that's what I was wondering too. 17 years ago,
what that is. Yeah.
Yeah. It's and we know livestock sector's been obviously stronger the past number of years, so just a little reflection of it right there. And also, again, you drift into that. Hay equipment has been pretty solid. So on the sale, they had a 22 model John Deere 560M round baler, 2,114 bales through it. That did 44.5, which if you pull back, the average auction price on a Deere 560M round baler this year is up 3.8%. Average is $28,623. Last year it was $27,575. So again, 44.5 for a 4-year-old. Pretty solid number.
Yeah. Yeah. And, kind of like we've talked about here so far, if you're looking at segments of what's moving through right now, if you look at this auction segment, this sale is pretty indicative of the equipment that you see selling right now. It's that stuff that's, 5 years old and older. All this stuff here was some 23s, some 24s, but 22s, 20s, 2009, those kind of things. You're watching that stuff sell through, and you're seeing those numbers come through that would represent what we've been talking about.
Yeah,
so I guess
and,
there's. Oh, go ahead.
Oh, I was just gonna say, piggybacking off that, to me, it's interesting the number of sales like this that we've seen.
Right.
This year in particular, 2026, it's kind of started late 25, but I don't know how old Jerry Evans is. I guess I don't know that from our friends, the Big Iron reps, but a retirement sale with lots of late model equipment. He also had a 24 model Cat 920 excavator with 70 hours on it, sold for $201,000. So I've been doing this again a long time, almost 37 years, but you just didn't really used to see retirement sales with this level of big late model stuff across the board, and so much of it.
Yeah.
It used to be estate sales. If unfortunately, if someone passed and was an aggressive growing operation, then you'd see it. But this is commonplace now.
Yeah.
Farmers with this level of late model equipment and tons of sales like this. And ironically, the timing, I don't know if ironic is the right word, but in a market that's tightening with used inventories across the board, this is exactly, the kind of stuff with, sales of new, like we keep talking about, sales of new have been so pinched for 2-3 or plus years that here comes Jerry's 3-year-old 9RX 640 with 255 hours and his 3-year-old N560 60-foot air seeder. So yeah, someone paid $398 and a quarter, highest auction price ever. But what's a new air seeder cost?
Yeah.
So yeah, I just find it interesting the number of sales like this that we've seen.
Yep, for sure. And that's also setting the tone for price, right? With these sales that we've seen coming through, with the lack of the huge dealer consignment sales, just the big overwhelming, every auction company has one or two big consignment sales every year. Typically one in the spring, typically one in the fall, if not one in the fall for sure. As to what's going on there, you haven't seen those numbers like that. Now, when you do see those, they have quite a bit of equipment come through them. But I think one of the saving graces with the current state of the equipment space, that has really been helping out drive price, those kind of things. It's the number of it's a bad scenario that's there, but there's some silver lining in that's keeping up the price of equipment higher than I've seen it maintain itself in a downturn like this, in a softening like this. Even though we've hit bottom and we're kind of chugging along there. My biggest fear is you start watching some of this 1 and 2 year old stuff come into play. How does that affect the marketplace when that starts coming through? I'm not sitting here saying that I think there's going to be a huge amount of dealer consignments are going to go sell 40 combines in one day or anything like that. I'm not saying that at all. But if you start seeing some of that kind of trickle through, these Big Iron sales, these Merit sales, these, Alex Kerr sales, those kind of things like that, we start watching those things work their way through. What's that do to the marketplace? And I'm thinking from a dealership strategy, from my opinion would be, if I could get a few of these combines to sell on Jerry Evans' combine sale and kind of sprinkle those in there a little bit, maybe I get a little bit more than what I would have gotten. Even though they say, hey, it's ABC equipment or whatever it might be, instead of having one giant, sell that you have all your own one thing, spread that stuff out 3-4 pieces at a time across some of these sales like this, and you might see a better return than what you would see otherwise.
Well, we're going to have a great example of what you just talked about, Casey. So we're recording this on, what is today? Tuesday? I'm old. I lose track.
4th.
So it's the 4th. So on Thursday, I think our friends at Merit are having a sale for our dealer friends at AgPro. Now, of course, AgPro, very unique with their geographic footprint up into the upper, the Midwest in Ohio, but then also in the Southeast. Now, this particular sale, I think they're labeling it their pre-harvest sale. No reserve, check out meritauctions.com. I know I just did a little social media thing for it, and I'm trying to remember. I think 9 tractors, 8 of them are from Ohio. They're Ohio locations, and a number of combines. Again, mostly all from Ohio, and then but a good mix right down through the line, and kind of sprinkling, like you say, not like what we saw 2 years ago in 24, where these dealer wholesale auctions. Oh, we saw lots, high volume of items per sale. So this merit sale is sort of just like you said, yeah, not a bad time to sprinkle some in. And of course, George and the folks at Merit do a great job marketing. So yeah, I think they'll have a solid sale Thursday. But again, check it out, folks, meritauctions.com. You can follow along and, make your own assessments of the market and look for opportunities. Historically, from my chair doing what I do, this time of year has been a great time to be a buyer.
Yeah.
Now, we have noted since the middle of June this uptick in hard cash auction pricing, but every sale still has its bargains. That's a truth that will always be. But I think probably the way you looked at it, Casey, and the way my smart auction friends look at it is you have your number on the sale, and you just, what we've been seeing lately is the number is coming out ahead of the estimate.
Right.
And there might be 1 or 2 or 3 items that sell a little light through the sale, but overall, again, like on the sale we talked about Thursday in Oklahoma there, $398 and a quarter on that 60-foot air seeder, 3 years old. That went almost $20K over anything that I've seen. So it's a interesting time.
Yeah, for sure. And there's going to continue to be this thing as you watch how this plays out. Okay, so they're coming up here. This is typically order writing period for combines right now, especially on the deer side. And I'm pretty sure Case is in a similar, CNH is in a similar mix of that time frame as well. But looking at the number of combines that are going to get ordered new compared to the number of used pieces that come in, it's going to be off. It's going to be down from what it was the year before, which is great because it needs to be. And as you watch things push their way through, I'm not at all going to sit here and tell you that I think there's going to be a rush on price, even if we start seeing some crazy things happen with commodity prices as far as prices going up and those kind of things. What I think we're going to see is, I feel like we're stabilizing the marketplace into a like I've talked about, kind of this new normal thing. Like we're stabilizing the marketplace into a more friendly, buyer to inventory ratio.
More balanced.
More balanced.
Yeah.
Now, there's a lot of 23 stuff, a lot of 22 stuff, a lot of 21 stuff that needs to get, moved to a different home and kind of push its way through to make that stabilize. But once that stabilizes and you get those things kind of squared away, but you start looking at 24, 25, 26 model stuff coming in, those numbers are so much smaller than we've seen in the past that I think it puts out there an even kilter. You start looking at the amount of equipment that's available for sale and the number of customers to sell, because the more conversations I'm having with guys, and a lot of it right now is driven by the economy. There's no doubt about that. I'm not going to try to sugarcoat that this is some kind of big switch in thinking, but even when things turn around, I take a hard look at I'm going to use tractors, for example, right? When I'm looking at tractors right now, I think that's one thing somebody can look at and say, do I need to trade my tractor every year, every 2, every 3 years? Like, how long do I need to keep my tractors before I really need to trade them in? The wild card, in my opinion, on that is this, balers, self-propelled forage harvesters, pull-type forage harvesters, sprayers, combines, those kind of things, where there's a lot of moving parts, a lot of different systems that are functioning at the same time. And when those repair bills come around on those particular machines, they're significantly higher. So how do I manage that risk comparatively to long-term, budgeting of repairs and those kind of things? Like, how does that start fitting into what I'm doing? And I keep coming back to tractors get longer, and maybe some of your harvest equipment gets a little longer. Maybe your planting equipment gets a little longer. I think planters, in my opinion, I'm watching planter market right now, and I see more and more planters getting out there running longer and longer, and just being, fixing stuff as they need to be fixed, those kind of things.
Yep.
Upgrade kits are starting to come into the conversation a lot more on those particular machines. So as you watch this transformation, which I think is happening now because of the economy, I think it sticks around after things turn back around and things push forward. That changes the dynamics of used equipment and how things get
Big
sold
time.
dramatically. You know what I mean? So if you start looking at, hey, we're going to go out and sell these 1-year-old machines to these bigger guys and stuff's coming through, I think what we see happening right now is setting the table for a really healthy used equipment space 2-3 years down the road.
Couldn't agree more, Casey. I mean, you're on it. In fact, doing what I do, I look for data, confirmation for trends up or down, but also the people component. So, for example, end of last week, I was in Western Kentucky for 3 days. I was down to speak at an event called the Wave Ag Day. It's 4 counties in Western Kentucky, very, very heavy ag counties, and they pulled together to push forward their economic development, led by Dr. Tony Brannon, the former head of Murray State Ag Department. Everyone knows Tony. He's a great dude. So much fun. So I'm hanging out there for 2-3 days. One thing, the corn is unbelievable in Western Kentucky. I mean, it was amazing. And the Kentucky farmers down there were saying, Pete, this is the best we've ever seen it. So there's that. But so many conversations with farmers along the lines you talked about, like, you know what? This used market is structurally really changing because the guys that were buying all the new stuff on the multi-unit deals, that's kind of evaporated. So the people down the chain that were getting that slotting in for that, whatever, the 2-3-year-old, and then the next slot, 6-7-year-old, the whole thing is adjusting on the fly. And it is a more healthy, balanced thing that we're going towards. The one X factor that I keep coming back to is farmers verbalizing, this is wherever I go, online or been traveling a ton, will say, Pete, we're just rolling different now. We're gonna run our used longer. The dollars are so high. And this manifested itself in one young Kentucky farmer who was at the meeting last Friday morning. His name was Quint Pottinger. People maybe have heard about him. He's the first Kentucky farmer to plant his whole crop autonomously. And he's a young guy. So he got up and just shared his truth. And what he's done, I don't know if Quint's dad passed away, and he was he was getting into the family farm. So the numbers involved are huge. And he and his wife were looking like, the math is not really mathing here. So they thought about it, and they looked at all kinds of different things, and what they wound up doing was selling a ton of their equipment. They sold $400,000 worth of stuff off the farm, and then sold his 6430 Deere tractor, bought I don't know if it was one of those 30M series, 130 horse tractor, and he's got it rigged up behind an 8-row planter behind it, planting autonomously, not the bigger, faster, high speed. He's going smaller and slower. And he's not necessarily doing it because it's hard to find help. He's doing it for the math reasons, and is saying that we're a young couple, and the debt load we were servicing equipment wise, it just wasn't making sense. And that is what I'm sensing. And that's why we see more of these auctions like the one we were talking about with all this. It's kind of farmer downsizing. You might call it a retirement sale, or you might just be calling it downsizing. So the key question for me is whenever corn and beans do find a higher, stronger price point, do farmers go back to buying the level of new equipment they did before? Because what they're telling me is it's too expensive and it's not working. So then they still got to farm their acres. So that drives them into the used market, which happens to be tightening, right? As they're all thinking the same thing. And that's why, going back to the data, that's why you maybe see that N560 sell 18,250 over the previous high.
Right.
It's a fascinating mix we got going right now.
Yeah. Yeah. And we've had plenty of people, conversations with folks that have been, I've got, well, I'm just throwing a number. I got 4 or 5 tractors now. And the 2 generations before me farmed the same amount of ground with 2 smaller tractors, by the way, that were not nearly as big as these ones. So there's a lot of dynamics changing right now, and it's coming back down to what makes sense. What's the sense? A dollar's the sense, right? That makes sense, right? And I think that's the conversation you're seeing people have, and it's getting to be a hard and fast look at. I got a banker that wants money. I got to plant my crops. I need all the seed, fertilizer, all the inputs associated with that. Diesel prices aren't changing anytime soon, right? And if not, they're going to get more expensive as things, with geopolitically speaking, as things move along. So there's a lot of stuff on this equipment side of the business where people are taking a hard look at this, saying, how's my payment structure going to be played out? What's that going to look like? And then how do I service that moving through? And you're seeing a lot of conversations like this where I'm going to downsize a tractor or 2. I'm going to downsize a combine or 2. I'm going to downsize. I'm going to you're seeing some of that take place where, the autonomous thing, you don't really have, it's smaller 8-row stuff like that, but you can plant 24/7, 365. You just got to keep it full.
Exactly.
You know what I mean? That's
he talked about, the young farmer Quint was talking about, and what I could sense, Casey, in the room of farmers, there was a collective lean in to what this dude was saying. Now, it was interesting. He said, of course, we live in a social media world, and he said 90+% of the blowback he gets is from young farmers, 18 to 28 years old. He said, and Quint was very professional, did a great talk. In fact, I told him, I said, I got to hook you up with Clinton Griffiths and Ty Morgan, because more people need to hear your experience, and they might not agree with it, but he said young farmers, and he was saying, well, it's like, hey, don't take away my tractor time. That was my vision of being a farmer, is, behind the wheel of the combine and the tractor. And here's a young guy saying, no, I think the way to do it is just to send my tractor out there robotically and just plant 24/7. It's real slow motion, 8-row planter. And he tied it back to Ag Commissioner Earl Butz, of course, back in, I think, the early 70s, with the mission telling the American farmers, like, hey, we got to feed the world. Which is, was a wonderful message. And the American farmer responded. Everyone got bigger, 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 faster, faster, faster. Now here's a dude who's doing the opposite. He's getting smaller and slower. But it goes back to what my dad taught me. I mean, take a pen and a napkin and start figuring your numbers, income, expenses. If it don't work on the napkin, it don't work.
Right.
If it works on the napkin, then you got something to deal with. So, but again, to me, the question is, it's tax policy, really. So all these sales, these auctions, like I just said it, it's like I've never seen so many retirement sales with farmers having 1, 2, 3, 4-year-old beautiful low-hour equipment. Now, I don't know if we can quantify the extent to which a lot of that was purchased for tax purposes. I mean, farmers are hammered on taxes, more than anybody. So equipment is a way to minimize that. And our data has screamed it for a quarter century. November, December auction prices are higher. They just are. Mm-hmm. So, yeah, all this is all wrapped together in this mix. And the longer it stretches out, it just gives collectively the space more time to kind of chew on things. It's kind of what we're seeing. So,
yep, right on. Yep, things are changing. Just like the old Bob Dylan song, things are changing. So, you keep plugging through, and then you have to adapt to what's going on around you, and you
Exactly.
move forward.
But you're right, Casey. The new normal you talk about I think that's settling in, and I sense farmers are starting to kind of absorb that. And within that is opportunity. Now, this young guy in Kentucky, that's one take on the opportunity, but all kinds of different opportunities in there. So, I guess that's always been the truth in agriculture. Difficult, challenging times, but also exciting times to find your way forward.
Right on, for sure. All right, Greg, good place to stop. Folks want to have you come out and talk at their event, or have them come and have you come and video their auction. What's the best way for you to do that?
Yeah, just hit our website, machinerypete.com. Our contact info is right on the bottom, folks, or Twitter or Facebook. Shoot me a note. Sometimes it's hard for me to catch all the notes that come through on Facebook. Thank you so much, everybody, for sending those through. But yeah, just our office, and then they get word to me, and it's. And I think I mentioned it. We do have one auction I should highlight. Casey, you get a kick out of it. We're going to film it August 27th in Aledo, Illinois. A sale by Merit Auctions again. Shout out to Merit. But the sale is a retirement sale for Donald Shorty Peterson. And Shorty is 104 years young. So I can't wait to get high-def cameras talking to Shorty about how he started farming. And there's a ton of GPS equipment on this auction. So it's like, Shorty, tell me about that. Can't wait. It's going to be great fun.
Yeah, that'll be a good one. Well, Greg, appreciate you being the podcast. We'll catch you again next week.
Sounds great, Casey. Have a good one.
All right, thanks.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with ExactEmerge and get accurate singulation and spacing at 10 miles per hour. Or choose ExactShot to promote early root growth and cut fertilizer costs. And with FurrowVision, save time by verifying seed depth right from your cab. Visit johndeere.com/planter upgrades and see why nothing runs like a deer.
All right, welcome back to Moving Iron Podcast. I got Aaron Fennell back on to talk about what's happening in the world of equipment. Aaron, how you doing today?
I am terrific.
It's been a minute, man. How you been?
It's it's been a summer. Ironically enough, it's I think 51 degrees outside right now, but it was 109 on Sunday. So good times.
It's this weather pattern right now is very odd because like today, I think today's high is 75.
Yeah.
It was whatever it was, 109 like you talked about on Sunday, and then it's supposed to be like 105 on Saturday again. So I mean, it's just like we get this. I feel like this is one of the hottest summers we've had out here in quite a while. I mean, it's been really, really warm.
I've been out here 20 years, and it feels like the most one-up days for sure.
Yeah, for sure. Yeah, it kind of started, and it started, and it was supposed to only last about a week, and here we are, 6 weeks later, and it's been 95 to 105 for the last 6 weeks. So, which there's guys up in the Dakotas that have had that, but it's been like 115 for 6 weeks. It seems like in that area,
Yeah. And then you got your odd little pocket of Billings that's always hotter than us for some reason. So
yeah.
There it is. No, summer's been good. Things are still moving fairly decent considering, customer interest is I would say in all reality better than I expected for the entire year. From January to now to the beginning of August here, it's probably double what I expected. And by saying that, just like everybody else, no, it's not the $500,000, $700,000 stuff that's flying out of here. And nothing is flying out of here. But, you know, you're still, you stay in that sub 3, and, you know, it's pretty steady. And ironically enough, over 5 has been, of course, over 5 essentially is 1-year-old, low hour, you know, that stuff is its very own little upper echelon. That stuff is getting a decent amount of traction. For the year, at least in what I've seen, that 300 to 500 in your inventory level is the kicker. That is where it's really hard to accomplish a lot of things.
Yeah.
You know?
Yeah.
And there's a lot of stuff in that pot, which, back to what we talked about a couple podcasts ago, Casey, you're in that's your second and third trades are in that, or seconds for sure are in that. So we've reached a point where once this new calms down, which it has, and you get that relegated so that the glut, we don't keep supplying the glut, which everybody shut her down. Things are normal for what we're doing with new across the board. But so you're not producing 50 of those anymore, but you're still producing 10 of them, and they're still not going anywhere.
Right.
You know?
Yeah.
It's getting the guy to buy that second trade where the problem is.
Well, yeah,
because
and it goes back to
still, everybody went and, you know, when everybody leapfrogs, that's what happens. Everybody went and bought new. Well, the guy who would normally be buying that second trade, he's sitting in one that's that exact tractor right now. That's the problem.
Yeah. Yeah, and I think
by the time it trickles down, you got to get to that sub 300, because then you get to your 10-year older stuff where everything's open.
Right. But I also think, too, that the driving factor behind that, you're exactly right. I mean, there's nothing there you said wrong. I think the other driving factor behind that, too, is I think guys are taking a look at their equipment and saying, like, you know, hey, here's the deal. I typically trade it every 3 years, and now I've had to stretch it out to 5. And because of the economy and the situation, whatever else not ideal for me by any means, but I made it work. So maybe I should start thinking about trading my stuff every 5 years instead of every 3 years. Right. Maybe that becomes the new normal. That's like the new high water mark on the wall. Like you're talking about that second trade, that stuff that's in that $300,000 to $500,000 range. You know, when you're talking about large ag stuff, that is a tough spot to look at, because it's two things. One is, most of the guys that are trading something in are in that very range of stuff that they're bringing in, and they're looking at, okay, so I got a $300,000 something that's going to cost me $300,000 to trade, or, you know, $200,000 to trade, or whatever the number is, and that's going to give me, just not worth me doing that right now.
Right.
It could be some of that could be interest driven, but I've heard a lot of people talk about, still, you know, I've still got, you know, I bought this right at the tail end of 20. Here I am, you know, 4, 5, 6 years into this 7-year note or whatever it is. I got 2.75% interest or something like that. I don't feel like trading up. I look out there right now, though, and I see a lot of 0, you know, 12-month waivers, 24-month waivers, 4.9 effective, you know, APR, that kind of stuff. How's that, when you look at that, you talk to customers, how is that changing their thought process? Because I'll preface this with the question with this. I can remember back 10 years ago, everybody had 5% or 0% interest for 5 years on balers, for example. And I don't think we sold any more balers because we had 0% for 5 years.
No.
Now, that was a different era when it comes to interest than what it is right now. But
that's when it was 0 on balers and the bank was 2%.
That's right. So it's a whole different animal, right? But if you talk about standard rate being, you know, somewhere between 6.5 and 7, somewhere in there, if you start breaking that down to 4.9, that makes a huge difference in how that works with depreciation curve and interest and everything else that comes into play. Is that moving the needle off for you when you start talking to folks with that?
Well,
waivers and stuff like that?
Not like you think it would. It still. And my role that I do with the company, I don't participate in that low rate stuff because I'm doing stuff with pricing, and there's certain rules with what's financed where and all that kind of stuff. So I personally don't deal with that much. But knowing we as a company did that, we had a 3-year waiver. And, you know, you got a list of 40 combines and they all apply for that waiver. And I think we sold 3 or 4, maybe 5, you know. So, and were those guys going to buy a combine at 5%, 6% anyway? You know, what I have seen in my world is you take a John Deere rate, an Ag Direct rate, a Direct Ag rate, any of that, and discuss that with the farmer. 99% of the time, his bank will beat it. That's what I'm seeing here lately. Especially a regional bank, you know, not Bank of the West or U.S. Bank, you know, none of that. Right. Of course, they're not doing a lot of U.S. Bank, probably isn't doing a lot of farm notes anyway, but
I'd be surprised.
Probably. But no, you're, you know, like around us, Platte Valley Bank or, you know, something like that. Your regional banks are fairly aggressive on rates on a purchase scenario like that. I don't know what they're doing on, you know, operating notes or anything like that, but I know I hear numerous times throughout a month that my bank, they said they'll beat that all up. So we'll just do a wire. Like, all right, cool. So at the end of the movie, what I like to do, because I don't get to play in the waiver game, me, myself. Company always does. I don't get to in my role. But because of that, I love to walk guys through, and I shouldn't use this word in this company, but how it washes out. Okay. So be like, okay, so I'm 6%. He's 2.9. But my combine is here. Here's where his is at. Are you keeping this for 5 years? That's always the kicker. If you're keeping it for 5 years, he might win. If you're keeping it for 3, 4, what are you doing? Because even though it's less finance, you're still financing more because it's that price of that machine. So you can dissect it. If I could attack my own self the opposite way. You know, it's whatever you can look at it, and there too, it's up to the buyer. So if that I want every penny of my own as long as I can, well, the 2.9 guy's going to win. You know, he's a welcome to the family S670. You know, not a yep. Put your boots over there, and once this is where you live for 2 years or 3 years, not part of the family.
Yeah, looking at payment structures is, I think, a key factor. 0% sounds great for a long time, and it does change a lot of things. At the end of the day, like you just talked about, you're still fighting depreciation. That's one thing that is the biggest part of that is that you know, as your interest rate stays where it's at, and you start looking through how that affects the overall, you know, where your payment structure works, those kind of things, you still have that depreciation curve, and you have to be able to keep up with that depreciation curve, even though that you have the 0% financing. Does that still keep up with the depreciation? And that's the key factor when you're breaking down your payment structure. 0% financing sounds great, but how does that affect your depreciation curve? For sure.
Well, and it really is how the customer is wired, ultimately, is what it comes down to. My dad thinks completely different than me. You know, he is it comes here to die here. He calls himself an end user. When I go to Walmart and buy a bar of soap, I'm like, $2.99. Now, if I have to sell this tomorrow, can I flip this for just a nickel or two extra? It's how you're wired. So me being wired the way I am, where I look at everything, if I got, it helps having that discussion with a guy. Any big purchase I look at with, okay, the sky falls tomorrow, I lose an arm, whatever, I have to sell this because I need that money somewhere else. Can I do it? And I have that discussion with guys all the time. And by having that discussion with them, helps them look at it from a different angle to see, okay, here is the bottom line. Here's that bottom line. It's not what you thought it would be. And by having that discussion, it really kind of puts that to bed at some point, ultimately, in I'd say 100% of situations, I'm not the local guy either. Right. So local guy, he's got the interest that's hard to beat sometimes, and guys are loyal and whatnot. So I'm not saying that doesn't win, because it certainly does. But if you have a guy who's, just looking at the dollars and cents of it, dollars per investment is huge. I talk about that all the time with guys. Looking at that really for what you're after is ultimately what matters. Everybody knows that. But by doing that and not getting glazed over because of rates, it's a completely different way to look at it, and does you more good than chasing a rate, chasing a program.
Yep, for sure. Yeah, paying attention to what that structure looks like.
Helps if you're playing into we're hanging on to this longer.
Right, but you have to ask that question. Are you hanging on to it longer because you're planning to hang on to it longer, or are you hanging on to it longer because the dollars and cents are making you hang on to it longer?
Right. That's exactly right.
Two entirely different planning structures, right? One is my plan just went out the window, and the other one is, all right, we're planning on, this is plan A is to go 5 years, not 3.
Right.
Plan B was, we were going to go 3, now we have to go 5. So we have to start figuring out repair costs and longevity and those kind of things.
Or we were going to go 5, and now there's a hole in the side of the block.
Right. Those are all fun conversations to have.
Right.
Yeah. So I think one other guidance thing I've given guys in the past is take a hard look at what it is that you plan on going longer with, right? Are you going to extend I think to me, for example, I think it makes a lot more sense to extend a tractor, for example, than it does a combine, chopper, baler, those kind of things, because moving parts and those kind of things and how that looks. If there was anything that I was going to keep a hardcore, we're doing X every year type of thing, or every 3 years or every 4 years or whatever it is, it would be with those kind of machines, those combines, balers, choppers, those kind of things, where there's a ton of moving parts that are going to have a big effect on your overall operation when it comes to repair costs. Now, if you're building in repair costs to your budget, those kind of things, and you're factoring that in, well worth your time to do that. To me, a tractor, granted, tractors break just like everything else does, but those they have a different curve when it comes to repair costs. And when you're looking at like a combine, for example, you get past the first 500 hours, you start seeing some pretty big repair costs, right? You get past 750, you kind of jump into another group up to, so on and so forth down the line. Those repair costs keep cycling their way through. You put 5,000 hours on a tractor, you might have had some repairs along the way, but it's maintenance more than it is repairs on those kind of machines.
Well, and something that's playing into that, Casey, we're losing farmers every year.
Yeah, we are.
So that means the rest of them are getting bigger, and hours are changing so much. I just had a blurb in my head in my early red days that we had a customer who was a 3-year combine roll guy. You buy your new, you bring it to the shop, it's warranty. That second year, and 250 SEP, right? So first year, get done, bring it to the shop, winter program, goes through the shop, it's warranty. Here's your combine. Second year, harvest, bring it to the shop. Still isn't that much to fix, right? And then you go about your day, and then you go do year 3, trade instantly. That combine, in that scenario, you made a little bit on the new. That used one was never a problem, or any of its trails. And voila, there you go. What didn't I say? Well, this guy has 7 combines. He trades every one every year.
Right.
I mean, that was just like, that was a glimpse back in part of my brain of what 25 years ago looked like, you know? But to that point, is that even a thing anymore? I where I bet that's on 2 hands across the country where that's a thing.
Well, that's a growing thing back. I mean, how many guys are going to go out and buy one brand new combine and then roll it every year? I mean, just the dollars and cents don't make sense to do that anymore. Right. It's hard to make that work. It's really hard, to make the dollars come out when you're looking at, the $650,000, $800,000 for a class 7, class 8 combine, class 9 combine, something like that. I mean, like you're a long ways away from making that pencil, so
exactly.
And you still got to buy a head jet for another $150,000, $200,000 to make that work.
Can we trade for $1,000 a SEP hour?
It's getting that. I mean, that's the point. I mean, that's like, where does that stop?
Yeah.
That's why I keep talking about this new normal. And I think, to me, this is the new normal, right? I mean, it's like, I can't trade my equipment every year or every 2 years or every 3 years that I used to. I'm going to be, I'm 3 to 5 years now. That's kind of my thought process. And I think that's just going to change things, which is going to inherently decrease the amount of new equipment that gets sold, which then decreases the amount of used equipment that gets sold, which I think doesn't, I hear people talk about this, like, oh man, we're going to run into a place where there's, we're going to have this big hole in the used equipment space, and there's going to be, we're going to have to go out and start, buying used equipment because we're going to, maybe, I mean, you got to have people, just because there's not as much used equipment on the marketplace as there was, which, by the way, there still is the same amount of used equipment on the marketplace. That hasn't changed. It's not like there's 50% less used equipment or 30% less used equipment on the market. It's the same as it's been, right? It's just a different mix than what it was. So when you hear people talk about that, be cautious about understanding what they're talking about. They're talking about 5 to 12-year-old equipment. That's where the hole in the inventory is at. Right. Everything ahead of that 5-year-old stuff, there's plenty of it. There's plenty of it to go around. They're still there. It's not gone anywhere, right?
Can I get you a 23 model?
Yeah. And that's right there. So that stuff coming out of COVID is where, that's what the 12, 13, 14 stuff was now. Back when we started doing this together. That's where that
it's now called
23 stuff.
21, 22, 23.
Yeah. And the reason for that is, historically speaking, everything that was on order 21 that got canceled, that got half ordered and got half canceled in 22, and the 23 stuff that got fully delivered, all of that stuff came in at the same time. All in 1 year, all in one fall, 21, 22, and 23 stuff came in all at the same time. Basically from September through March, I guess. So fall and spring or fall and winter orders, right? All came in at the same time, and everything hit at once. That's why there's a problem in the marketplace, right? It has nothing to do with how some stuff did get oversold. I'm not going to sugarcoat that at all, but it seems like stuff. Well, I should say this stuff seemed like it got oversold because guys just kept reordering what got canceled. Well, it all came in at one time. That's what it was, right? And that's what drives the marketplace now into a different market. And next thing you know, we sit here with this pile of stuff. But if you look on the other side of that, 24, 25, 26 stuff that's coming in now, totally different animal. There's hardly any of it what's going to make it now, which is good, right? I mean, I've heard, analysts and stuff like that, like, oh, well, I mean, how are you going to get the thing, baby? I go, this is about the best marketplace I've ever seen as far as available equipment for sale compared to buyer. Like, you know what I mean? Like, I mean, it's like way different. I mean, last time we've had these downturns, every other downturn I've been through, it's been not only is there a glut of equipment, there's a Mount Everest glut of equipment, right? To get out, and it never goes away, right? It's still there. I mean, the 12 and 13, 14 stuff is still. You look at inventory amounts and by year, and you start looking at where those things. There's still a peak up of that stuff. It's still out there. 10 years later, 12 years later, 15 years later, So the thing out here that we're getting at is, take a hard look at what you're doing. Take a hard look at your operation. And as you go through this buying cycle that's coming up here, into your buying cycle, I think there's going to be there's a lot of people buying stuff at auctions. Like, there's a lot of auctions going on and the prices are there. But what are they buying at those auctions? 5 to 10-year-old stuff. That's what's being bought at those auctions. There's some, 1 and 2-year-old stuff, those kind of things, but it's primarily 5 to 10-year-old stuff that's being sold there. And that's what people are looking for because of the price point. And that's what's driving that space.
Yes, sir.
All right, buddy. Good place to stop. Folks want to get some High Plains wholesale deals. What's the best place to find that at?
Well, you can catch High Plains Wholesale on Facebook, TikTok. You can catch me, Aaron Fintel, on Facebook, X, Twitter. Call me, text me, 308-760-1193. And they got specials all over all those places all the time. So get a hold of me.
Right on. Aaron, appreciate you being on the podcast. We'll catch you again next time, buddy.
Right on.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.